Something's happening in America's heartland, and it's happening fast. Land that once sold for record-breaking prices is suddenly worthless to investors. Billionaires who saw farmland as the ultimate asset class are backing out, selling at losses. And for those who still own it, margins have gone negative. American farmers are watching their bottom lines sink as foreign competition, skyrocketing interest rates, and a collapsing credit market squeeze them from all sides. But why? Why was U.S. farmland once a golden investment, and what triggered this sudden collapse? Stick around because what's happening now could shake the entire food supply chain, and no one is talking about it. For decades, farmland was considered one of the safest investments. It was simple. People always need to eat, and when the stock market got shaky, investors poured money into agricultural land. Billionaire moguls like Bill Gates and Warren Buffett saw farmland as a hedge against inflation. Institutions, pension funds, and foreign investors all jumped in. But here's where things started to crack. During the pandemic, farmland prices exploded. Investors, desperate for assets that could outpace inflation, bid up land values. By 2022, average U.S. cropland values hit $5,050 per acre, a record high according to the USDA. The problem? These investments were based on projected returns, and those returns never materialized. Fast forward to today. Margins have collapsed. Grain prices are plummeting. Interest rates have skyrocketed, making loans for farmers impossible to pay back. Land that was once a safe haven is turning into a financial trap. And this is just the beginning. The numbers don't lie. Take corn farmers in Iowa. Just last year, they were making $250 per acre in profit. This year, they're losing up to $100 per acre, according to data from the University of Illinois. Wheat farmers? Some are down $50 to $80 per acre. The reason? Fertilizer and fuel costs shot up, but crop prices crashed. The price of corn dropped 30% in a year. Wheat fell 40%, and soybeans tumbled 25%. It's a perfect storm. Farmers who borrowed at low interest rates in 2020 to 2021 are now getting crushed by high rates on their refinancing. Banks are tightening credit, and suddenly, farmers who were once thriving are staring down bankruptcy. So how did the U.S. lose its competitive edge? For decades, the U.S. was the world's breadbasket. No one could compete. That changed when China, India, Brazil, and Russia decided they didn't need American grain anymore. China, once the biggest buyer of U.S. soybeans and corn, cut purchases by 30% in just 1 year, according to USDA trade data. Instead, they're importing from Brazil and Argentina, where costs are lower. India, with its government-backed agriculture programs, has started exporting wheat at record levels, while Russia has flooded the market with cheap grain, undercutting U.S. farmers. And it's not just trade. These nations heavily subsidize their farmers, while U.S. producers are left competing on an uneven playing field. But there's another twist. Why are developing countries producing more food than ever while American farms struggle? The answer is technology and government intervention. Countries like Brazil and India have rapidly modernized their agricultural sectors. In contrast, the United States is stuck with outdated policies and infrastructure, while Brazil cleared over 20 million acres for new farmland. But in the last decade, American farmers are dealing with EPA regulations that restrict expansion. India's government buys wheat from farmers at guaranteed prices, keeping their industry profitable. Meanwhile, U.S. farmers are at the mercy of global market fluctuations. But investors had a different idea. They thought the future was vertical farming. That bet failed spectacularly. Indoor farming was supposed to revolutionize food production. Companies like AeroFarms and AppHarvest promised to grow food anywhere, at any time, using less land and water. Investors poured over $2 billion into the industry, expecting huge returns. Then reality hit. The costs were astronomical. These farms required massive energy inputs. Indoor lettuce production, for example, cost 5 times more per pound than traditional farming. AppHarvest filed for bankruptcy. AeroFarm shut down key facilities. Investors who saw farmland as a tech play got burned badly, and they're not making that mistake again. Now, even traditional farm equipment manufacturers are losing ground. John Deere, once the gold standard, is struggling. American farmers are holding on to old equipment because new machinery costs 40% more than it did 5 years ago. Meanwhile, Chinese and Indian manufacturers are flooding the market with cheaper alternatives. A tractor that costs $150,000 in the US can be bought from a Chinese company for half that price. Farmers looking to cut costs are turning to foreign brands, and that shift is devastating American manufacturers. But there's another unexpected twist. While everyone expected food prices to rise, they're actually falling. Inflation should have made food prices skyrocket. But in 2024, the opposite happened. Wholesale food prices dropped by 7%, according to the Bureau of Labor Statistics. Why? The food supply chain overcorrected from pandemic shortages. Warehouses are overflowing. Importers are dumping products into the US market. And consumers, cutting back due to high interest rates, are buying less, causing excess supply. Farmers are getting hit on both ends. Higher costs, lower prices. And the financial squeeze is pushing many toward bankruptcy. Farmers who took out loans at 3% interest in 2021 are now paying upwards of 7% or more, doubling their debt costs overnight. According to the USDA, total farm debt is projected to hit $535 billion this year, the highest on record, while farm income is plummeting. Banks, worried about defaults, are tightening credit, making it harder for farmers to refinance or buy new equipment. The result? An avalanche of bankruptcies, with farm loan delinquencies surging 20% year over year, leaving thousands of farmers one bad harvest away from losing everything. Federal aid has been a temporary lifeline, with Congress approving $13 billion in farm subsidies in 2023, but most of that money has already been spent. The stalled 2024 Farm Bill threatens future assistance, leaving many farmers in limbo. Insurance payouts for crop failures have helped some stay afloat, but they don't cover the real damage from negative margins and rising input costs. Without additional federal intervention, thousands of small and mid-sized farms could be forced out of business in the coming years, consolidating more land into corporate hands. With farm bankruptcies accelerating and commodity prices sinking, lawmakers are rushing to increase crop reference prices, the minimum price the government guarantees farmers for staple crops like corn, wheat, and soybeans. The proposed increase would push corn's reference price from $4.01 per bushel to over $5, but the measure faces opposition over cost concerns. At the same time, policymakers are pushing for expanded farm loan guarantees to make it easier for struggling farmers to refinance debt. But with the U.S. deficit soaring, long-term federal support remains uncertain. Institutional investors who once saw farmland as a safe bet are now dumping assets at a loss, selling off more than $10 billion in agricultural real estate last year alone. According to real estate firm Acre, rising interest rates have made farmland mortgages too expensive, while sinking crop prices have erased projected returns. Foreign buyers, once eager to acquire U.S. farmland, are pulling back as global markets shift. The result? Land prices are tumbling in key agricultural regions, pushing already struggling farmers deeper into crisis. Some experts argue this is just a cyclical downturn, much like past farm crises. But others warn that global trade realignments, high interest rates, and declining investor confidence could signal a lasting transformation. If BRICS nations continue expanding their agricultural dominance, U.S. farmland could see a long-term devaluation, making food production less competitive and forcing farmers to either consolidate or exit the industry. The bigger question? If America loses its agricultural edge, who controls the future of the global food supply? This crisis is only the beginning. We're glad you're enjoying this video. Please like and subscribe. Check out another video that is now on your screen.